3 investigations, 3 revelations. In the first, we showed you inflation, the invisible tax, the silent mechanism that erodes your purchasing power while you sleep, every year, without exception, without mercy. In the second, we showed you the debt, $34 trillion, not a crisis to be solved, a weapon, designed to keep nations obedient and people compliant. In the third, we went inside your bank, and we showed you the darkest truth of all. The number in your account is not money. It is a promise, written in data, built on trust, and backed by nothing. 3 systems, 1 purpose, to keep you working, spending, borrowing, and never accumulating. But today, this investigation ends differently. Today, we don't expose the trap. We show you the exit. If the dollar is dying and the banks are an illusion, how do you survive? You move outside their matrix.
Let us begin with the most dangerous thing you own, cash. Not because cash is worthless, but because of what inflation does to it while you wait. At 3% annual inflation, $100,000 in a savings account becomes the equivalent of $74,000 in purchasing power. In just 10 years, you didn't lose the money, the system just made it worth less. Your bank pays you 0.5% interest on your savings. Inflation runs at 3%. You are losing 2.5% of your wealth every single year while doing everything right. Saving money, in the traditional sense, is not a financial strategy. It is a slow surrender. So what do you do instead? You don't fight the system. You don't beat it. You simply stop feeding it. You convert your labor, your time, your years of work into things the system cannot inflate away. 4 shields, not magic, not promises, shields. The first shield has been standing for 5,000 years. Gold. Every empire that has ever fallen, every currency that has ever collapsed, every government that has ever defaulted, gold survived them all. Gold is not an investment. Do not misunderstand. Gold does not generate income. It does not compound. It does not build. Gold is a store, a vault for your purchasing power, a way of saying to the system, this portion of my labor, you cannot erode. In 1971, an ounce of gold bought a fine men's suit. Today, an ounce of gold still buys a fine men's suit. The dollar price changed. The purchasing power did not. But gold has a flaw, a real one. It is heavy, illiquid, and it generates nothing while it sits. If you need your wealth to work for you, gold alone is not enough. You need the second shield. The second shield is one humanity has understood since the beginning. Land. Physical space, the one asset they are genuinely not making more of. Real estate does something gold cannot. It produces. A property generates rental income. It appreciates over decades. And during inflation, its value rises with the system that inflates it. Here is the dark irony. The same inflation that destroys your savings directly inflates the value of your property. The system inflates, and you, as a property owner, inflate with it. But real estate has a flaw too. It requires capital, significant capital. A mortgage, which, as we've established, is debt built on money that never existed. It requires management, maintenance, patience measured in decades, not months. Real estate is powerful, but it is not accessible to everyone, not yet. There is a third shield, one that levels the field. You cannot beat the system from outside, so you buy into it. Equities. Ownership stakes in the companies that run the world. When you own an index fund, a basket of the world's largest companies, you stop being a consumer of the system. You become a part owner of it. When Apple profits, you profit. When Amazon grows, you grow. When the system inflates the value of everything, your shares inflate with it. The S&P 500, 500 of the most powerful companies on Earth. Over the last century, it has returned an average of 10% per year. Inflation averages 3%. The market returns 10%. The difference, 7%, is your escape velocity from the invisible tax. But equities have a flaw, the most psychologically brutal flaw of all four shields. They collapse violently, unpredictably, and they test every instinct you have. When markets crash, the human impulse is to sell, to escape, to protect. The ones who sell lock in their losses. The ones who hold inherit the recovery. The shield only works if you don't drop it. 3 shields down, 1 remains. And it is the most controversial, the most misunderstood, and possibly the most important one ever created. Everything we have discussed in this series comes down to one fundamental problem: central control. Every asset we've discussed exists within the system. Gold can be confiscated. It has been in 1933. Real estate can be taxed into oblivion. Equities can be frozen, regulated, manipulated. In 2009, an anonymous architect built something different, something the hand on the control panel cannot reach. Bitcoin, not a stock, not a currency, not a company. A protocol, a set of mathematical rules that no government can rewrite, no central bank can inflate, no single entity can control. There will only ever be 21 million Bitcoin. Ever. Compare that to the dollar. The Federal Reserve has printed more dollars in the last 5 years than in the previous 100. Scarcity, enforced by mathematics, not by a government, not by a central bank. Not by a promise, by code. But Bitcoin has a flaw, the most visible flaw of all 4 shields: volatility. Bitcoin can lose 50% of its value in months. It can gain 500% in a year. It is not for the fragile. It is not for the impatient. What Bitcoin offers is not comfort. It offers sovereignty, a portion of your wealth that exists outside every central bank, outside every government ledger, outside their reach. Used wisely, as a small, deliberate portion of a broader strategy, it is the only asset in human history specifically engineered as an escape from the system we have spent 4 episodes exposing. Let us be precise about what these 4 shields are and what they are not. They are not a path to instant wealth. They are not a guarantee. They are not a cheat code. They are a decision, a deliberate, calculated refusal to let your labor be the raw material for someone else's system. You cannot destroy the matrix. You cannot vote it away. You cannot protest it into collapse. You cannot ignore it into irrelevance. But you can refuse to be its battery. You can convert your time, the only truly finite resource you possess, into things that hold their value across decades, across governments, across the collapse of currencies that were once called permanent. This is not rebellion. This is not paranoia. This is not pessimism. This is literacy, financial literacy, the kind they chose not to teach you. The system is not evil. It is indifferent. It does not target you. It simply extracts from whoever remains inside it. Uninformed. You have spent 4 episodes inside the machine. You know how it prints. You know how it borrows. You know how it multiplies. You know how it drains. And now, you know how to step outside it. The machine will keep running, but not with your energy, not anymore. Shadow Ledger HQ. Now you know.